Hi everybody, I'm Brian Dooley. I work for LOM Asset Management, and I'm here today to introduce the Stable Income Fund. I work with two other colleagues, Grant Hopkins, who's a chartered financial analyst, and Max Fiedler, who's working on his chartered financial analyst designation, and a good technical associate. So together we'll be managing the fund, and we've already achieved great results on some of our other products, including our 5-star rated LOM fixed income fund, which is also managed by the same team. The Stable Income Fund will be invested in two major asset categories. They're similar but different in some respects. The first part would be a preferred shares or preferred stock, which pays a set quarterly dividend. It's kind of a hybrid type of investment that bridges the gap between a stock and a bond. The other type of investment will be high dividend paying stocks. So these will be, many of them will be utility companies that have monopolistic characteristics, and because they don't consider themselves growth companies, they take their cash out and pay it to investors and hopefully increase it over time. In terms of how the product will operate, it will be valued monthly, so there will be monthly subscriptions and withdrawals. In terms of the amount of income, it will be paid monthly, but based on an annual rate, which will initially start at 3.6%. So the rate will be 3.6 for 2011, and then for the next year, starting in 2012, we'll agree on a new rate, which will probably be somewhere between 3.5% and 4%. And that will be the rate that will be applicable for the next year. The underlying assets we will be managing, they'll be actively managed. We have a quantitative discipline that we use for both the common and the preferred shares. So that reduces some of the bias and helps us to turn up ideas in all the major markets. The underlying assets will also be very liquid. They'll trade on the major exchanges. They'll be capitalized at over $2 billion. And the underlying credit quality of both the stocks and bonds will be in the upper tier for that sector. So altogether, we think we're bringing together a product which will offer not only a high yield, but fairly high quality and weekly liquidity. Well, it is a unique product. A couple things. First, it does combine the preference shares with the common stock. As far as we know, no other fund out there does that. The other thing is we all live and work in the offshore environment, so we understand the unique, not only the unique income needs, but also there are non-resident, some of the larger developed markets withhold dividends, so we do our best to, you can't completely avoid it, but we do our best to reduce that amount. So again, this was built for the offshore market. We're not people living in London making decisions about Bermuda or Cayman or the Bahamas. We're living and working in this market. Yeah, absolutely. It's, we know where we are. In the presentation we showed you some of our representative securities, but we expect those will change with the conditions of the company. Often we'll buy a stock, and if it goes up in price, it meets our target, we might sell that and buy something else. But we're looking at this fund every day. Wait. I know we went through that fairly quickly, but it is a scoring system. I've used it in the past. It's a blend of basically, we weight securities based upon attributes that we historically have led to better performance in the markets. So what that does is it removes or at least reduces the amount of subjective volatility. In other words, it's really hard for any of us to fall in love with a company. We've all done that, right? We love the company at 12, and then we liked it at 12, we love it at 20, and we still love it at 5. So this forces us a discipline on the process. The current income is 3.6%. That's what we've set for 2011. We think we'll do a little better than that, but we want to be conservative. So that's where we've set the income right now. Now, at the beginning of 2012, before January of next year, we will reset the income, and we'll tell you what that is. We expect it'll be around this level. However, that depends on where rates are, what we see in the underlying portfolio. On the longer term basis, we're forecasting anywhere from 3.5% to 4%, plus a total return of around 5% is our target.